Welcome back to the Hectare Trading Grain Market Update, where we brief you on this week's events and what's behind movements in the market. The Hectare Trading Midlands benchmark price for feed wheat is £173, down £1 from last week. The key development this week was Wednesday's announcement of a 2-week ceasefire between the US and Iran, conditional on the reopening of the Strait of Hormuz. While European wheat markets dropped on the ceasefire news, US wheat futures showed resilience due to alarming domestic supply fundamentals. The USDA has estimated a total US wheat acreage of 43.8 million acres in 2026, the lowest level since 1919, while the first crop progress report of the season rated only 35% of the US winter wheat crop in good or excellent condition, down from 48% a year ago. After the long Easter weekend, the London feed wheat May contract climbed to £176 on Tuesday, before dropping to £173.20 on Wednesday. The November contract, more exposed to production cost fluctuations due to the Middle East conflict, meanwhile suffered a near £5 drop to £181.05 on Wednesday. While the May contract recovered to £172.75 on Thursday, the November contract could only reach £179.20, reflecting concerns that shipping in the Strait of Hormuz is still virtually blocked. On Hectare Trading, farmers have been locking in prices on their new crop, forward selling 2026 feed wheat in North East Scotland, East Anglia and Northumberland and Scottish borders. The Hectare Trading Midlands benchmark price for milling wheat is £180, down £7 from last week. The fertiliser crisis continues to affect farmers worldwide and could force a global shift away from nitrogen-intensive crops in upcoming planting decisions. Meanwhile, crop conditions in France remain exceptional, with 84% of soft wheat and 81% of durum wheat rated good or very good, according to France Agrimer. Since hitting a 7-month high of €210.50 on the 13th of March, the Paris milling wheat May contract has weakened steadily, dropping below €200 on Wednesday to close at €197.75. Another lukewarm day saw the contract finish Thursday at €195.50. The Hectare Trading Midlands benchmark price for feed barley is £162, unchanged from last week. UK barley growers are currently navigating a mix of challenging market economics and favourable agronomic conditions. Weak demand from brewers, maltsters and distillers, down 18.7% year on year, is causing surplus malting barley to be diverted into feed channels. Meanwhile, the UK's winter barley is in its best condition for March since 2023, with 85% of the crop rated as good or excellent according to AHDB. Farmers have been selling their 2026 feed barley forward in central and northeast Scotland and the southeast for August movement. The Hectare Trading Midlands benchmark price for OSR is £428, down £8 from last week. Brent crude oil dropped from nearly $110 per barrel to below $95 following the Iran ceasefire announcement, but rose again on Thursday as the continuation of Israel's attacks on Lebanon put the temporary truce under severe pressure. The global oilseed complex is not quite as reactive to the energy markets as it was earlier in the Iran conflict. Nonetheless, the Paris rapeseed contract for May dropped by €9 to €497 on Wednesday. Following an intraday rally on Thursday, it retreated to settle unchanged at €497 on Thursday's close. Once you've signed up to Hectare Trading, you can access the latest market insights. By filtering on region, you can see our regional benchmark price estimates, our market analysis, the latest prices that have been offered to farmers, as well as market commentary, futures, and access to wider market news. That's all for this week. Don't forget to sign up to get the latest market insights and click subscribe to get the next update.